Good day and welcome to our webinar for September. We begin as usual in America, and on your screen is a chart of the S&P 500 showing the all-time record high in January. It was on the 3rd of January 2022 at 4796. That's on the left-hand side. And then you can see the new upward trend, which starts from the October low, which I think was 3577, and it's rising steadily. And you may have read our article, which is linked in the confidential report, and it was called A New Perspective, and it was published last month. But basically what we're saying there is that this downward trend that has taken place between January and October last year, which took the S&P 500 down 25%, was in fact a major correction within the longer-term bull trend. So what we are saying is that that bull trend was not broken, that this downward trend was not a bear trend, but in fact a major correction within the long-term bull trend, which began in March of 2009. All right, now when we look at the upward trend, which you see on your screen on the right-hand side there, beginning in October 2022 and running up till now, you can see that it had reached a peak. So I'll just put the mouse on that peak so that you can see up here. So it reached that peak, and that peak is just 4.5% or 4.3% below this all-time record high over here at 4796. So that is what leads us to believe that that peak will be broken, that record high will be broken fairly soon, probably before the end of this year. And that means that we are back in that bull trend. Obviously, that's got a lot of significance for private investors. It's got major implications, because it means that if we are in a bull trend like that, you should be close to fully invested. The JSE and other world markets are and will continue to follow Wall Street up. So that's your opportunity. That gives you a potential buying opportunity. At the end of this webinar, I will talk about the winning shares list and some ideas which we've come up with during the month for shares which have got a good potential to have a capital gain. But let's just take another look at this chart. You see this point at the bottom here of this downward cycle. So since last month, since we spoke last month, the S&P fell by about 5%. This downward trend here is about 5%. And on the 18th, it reached a bottom point there. And we noticed that, and we've talked about the fact that the Rand is a good leading indicator for the S&P 500. So we noticed on the 18th that the Rand had stabilized and was beginning to show strength again. And so we suggested that because of that, international investment sentiment was shifting towards risk on, and some investors were putting money back into emerging markets, and that was causing the Rand to stabilize and even strengthen. And that same positive sentiment, that risk-on sentiment, also tends to cause Wall Street to go into an upward movement. And so we actually ran a tweet on that day. I published a tweet on the 18th of August. And what I said in that tweet was the following: the Rand seems to be bottoming out in this cycle. This may well be an early indication that the S&P 500 is going to begin to strengthen again, and that the current downward trend is probably over. The smart money appears to be moving back towards risk on. So that's what I said on the 18th. And as you can see here, since then, the S&P 500 has been going up quite strongly and will probably break above the cycle high over here in due course. So you can get our tweets, the tweets that I put out there, and that information is down below in the description on this webinar, and you can just find your way to those tweets. So as you can see, the S&P 500 is strengthening again. The upward move is still in progress. It shows that the Rand is actually a good leading indicator for the S&P 500. Basically, when international investors become more positive, they want to buy high-yielding emerging market assets, and that causes the Rand to strengthen. Of course, their objective is to get that yield, and their positive attitude feeds through to the equity market in Wall Street, to the S&P 500. Okay, now let's look at the US economy. To us, it looks like the US economy will probably now avoid a hard landing, despite the rapid increase in interest rates over the past 18 months. The economy created 187,000 new jobs in August month, so it's still producing new jobs. The unemployment rate rose slightly to 3.8%, which was a bit more than expected, but it's still very low and very close to record low levels. The Fed is expected to keep rates more or less where they are at their meeting on the 19th and 20th of September, so we'll have another month of pause. And core inflation, which obviously excludes food and fuel, is coming under control. Even though consumer spending rose by a high 0.6% in August, we can see that the economy is cooling down and inflation is coming under control. The second quarter had GDP growth of 2.1%, which is not excessive, but it's also not recessionary at all. Altogether, it seems to us that the US economy will continue to grow, and at the same time that inflation is coming under control. This, of course, is very good for the Democrats and Joe Biden, who are planning to fight the 2024 election. It removes one strong criticism of Biden, that he cannot manage the economy, because the economy is doing exceptionally well under his watch. All right, now I'd like to just spend a few minutes talking about Ukraine, the war in the middle of Europe in Ukraine, the spring offensive, which got a lot of publicity, is progressing much more slowly than expected, mainly because of the incredible minefields which the Russians have laid down there. There's some discontent among NATO members and Western supporters, but there is progress, especially in the south. The capture of Robotny, the small village of Robotny, means that the Ukrainians have broken through the first line of Russian defense, and they are moving towards the key city of Tokmak. If Tokmak can be taken, then Crimea could be completely cut off from resupply. This explains the enormous effort which both sides are putting into the ground gained in this area. Both the Russians and the Ukrainians are devoting a lot of resources to the battle on the south side of Robotny and towards Tokmak. Obviously, if Ukraine can gain control of Tokmak, then it can cut Crimea off, and Crimea will probably not survive, and we believe that Putin will also not survive. If Crimea goes, if the Ukrainians can regain control of Crimea, it will be a massive psychological blow for Putin and a great victory for the Ukrainians. Of course, the autumn rains are about a month away, and that will be followed by winter, so they really have a few weeks now just to punch through and get to the Azov Sea. But they are making progress. That's really the point. Once winter is in place and the rains come and the place turns into a mud bath, mechanized advances by either side will become much more difficult. Okay, of course, in the month that has passed since we spoke last, President Prigozhin has been executed by Putin. It's pretty much for certain. And Putin's popularity in Russia has declined. Prigozhin was a very popular figure in Russia, sort of like a national hero. He was certainly the most effective of the Russian commanders in the war in Ukraine. And now other nationalist groups like the Chechens may decide to rebel. With the war in Ukraine, Putin does not really have the men and military hardware to control them. To us, it looks like the vultures are circling. They are anticipating a time when Putin is no longer there. At the same time that this is going on, the economy in Russia is basically dying. The ruble has collapsed, and it's now about 1 cent, 1 US cent for a ruble, which compares to the rand, which is about 5 US cents. So the rand is about 5 times more valuable now than the ruble. So that will give you an idea of what has happened here. And this, of course, is due to the combined impact of Western sanctions and the cost of the war. The strength of a country's currency shows its economic wealth. The loss of the European energy market has cost Russia dearly. Heavily discounted sales to India and China are not sufficient to compensate. Putin insisted that the Russian central bank fix the ruble, and he blamed the governor there, Elvira Banbuina, but she isn't to blame. He is to blame. Anyway, the central bank pushed interest rates up by 3.5%, which is enormous, to 12%. You can imagine what would happen in South Africa if interest rates were pushed up in 3.5% from one day to the next. To be dramatic, to put it mildly. So far, this hike in interest rates has held the ruble roughly at 1 cent, 1 US cent, but we expect it to fall further soon. Our view is that Putin may not survive until the end of this year, but we'll see. He's certainly very tenacious. All right, turning to South Africa and to the political situation here, as the elections next year get closer and closer, political developments become more important. The DA organized a power-sharing pact with 6 other small parties, and obviously their objective is to dislodge the ANC in next year's election. But this power-sharing pact also has an impact on provinces and municipalities where there are coalitions. If the ANC loses its majority in Parliament next year, it will have to make a compromise. The only question is whether it compromises with the DA or the EFF. Our view is that it will go with the DA. That pact seems to make more sense. And of course, a new dispensation without the ANC domination is risky. It might lead to more chaos, but at least it will make some things better, in our opinion. The ANC is putting on a very, very brave face on the 2024 election. They aim to win it outright, with an outright majority in Parliament, but their own polls disagree with this. And as the election gets closer, they're not really making the situation any better. Load shedding has moved back to stage 6 again, indefinitely. That's not going to help them. Notably, one of the big things that's happened in the last month is that the DA has faced off against the taxi industry in Cape Town. And it appears that they are being successful in bringing the taxi industry into line. The ANC has been afraid to confront the taxis. And as a result, we have dangerous and chaotic roads. The BRICS summit occurred, and of course, that is definitely a double-edged sword. Our membership of BRICS does not endear us to Europe and America, and they are our largest trading partners. They no longer believe that we are neutral in the matter of the Ukraine war. And this will undoubtedly impact on our application to stay in AGOA, the African Growth and Opportunity Act, which is now coming up for review. The BRICS countries account for about 25% of world trade and about 40% of the world population. These numbers will now increase because they've got 6 new members. But BRICS accounts for only 21% of South African trade, compared to about 75% with NATO countries. Notably, the Russian Chief Operations Officer of BRICS, Vladimir Kazabekov, has arranged an 18 billion rand loan for Transnet and promises to make more money available for our dilapidated water and sanitization system. The ANC will be happy for this new opportunity for the comrades to eat. The idea that the BRICS countries will create a new currency that will somehow displace the US dollar as the medium of trade in the world, or give it competition there, is to us absurd. The dollar is about 62% of world trade and about 60% of central bank reserves. Jim O'Neill, who's the economist who coined the term BRIC originally, says the idea of them producing a currency that will compete with the dollar is ridiculous. We agree with him. During the month, we had this fire at a government-owned building in Johannesburg, which killed 74 people. The building had no proper safety measures or escape routes. It was basically a high-rise squatter camp. The blame for this tragedy must be solely that of the ruling party. They are to blame. They have failed in service delivery throughout the country, and this is just a very dramatic example. But there are thousands more. The National Health Insurance Scheme is also coming up for consideration, and of course it is unaffordable. And that seems to be something that the ANC is slowly realizing. Business Unity South Africa has pointed out that it will cost about 200 billion rand to implement the NHI. And that means a hike in VAT or personal income tax or company tax. The economy is already struggling with load shedding and rising interest rates. It seriously cannot afford another idealistic and populist idea which will never work. So we believe the NHI is another white elephant. All right, let's look at the economy. The economy has been taking strain with high interest rates, load shedding, falling commodity prices, and logistics problems at Transnet. But inflation has been coming down, and that means that interest rates have probably topped out. So we expect interest rates to fall from here on in. But the economy is not growing fast enough to absorb school leavers, and that means the unemployment rate, especially for young people, remains high. But there are signs that the economy is definitely adapting, especially to load shedding. Let us have a look at some figures coming out of the economy this month. BankServe's take-home pay index showed that the average South African household took home 15,503 rand in July, which is substantially better than June's 14,170. That shows that people are a little bit better off there. At the same time, the BankServe Economic Transaction Index, or BETI as it's known, has been falling steadily. And in May it was down 7.4%, in June 1.7% down, and in July a further 0.9% down. This would suggest that the economy is contracting. Of course, there was less load shedding in June and July, so the contraction was smaller. There are huge problems at Transnet, and there have been the burning of trucks on the N3 and now on the N4. Exxaro, which is South Africa's largest coal exporter, has completely stopped sending coal to port by truck, because they say that with the coal price down to $200 a ton, trucking is about 4 times as expensive as sending the coal by rail, and it's no longer profitable. The Richards Bay coal terminal handled 50 tons of coal last year, which was its lowest achievement since 1993. In the first half of 2023, coal going through RBCT was 10% lower than that because the rail system is in a mess. The Consumer Price Index dropped to 4.7% in July. That's down from 5.4% in June and obviously well inside the target range. It means again that rates will probably remain unchanged from here on in and start to decline in due course. Retail sales fell by 1% in the second quarter, and that's obviously due to higher interest rates and load shedding. Consumers are downsizing in order to survive, and consumer confidence levels are also at a low point. Credit extension was 6.3% in the year to June, and then that fell to 5.9% in July, and that shows that consumers and businesses cannot afford to take on more debt. Unsecured lending particularly fell heavily, notably credit cards. New car sales were down by 9.7% in July, but exports were up. There was the base effect of last year's floods on Toyota bakkies, on the production of Toyota bakkies, that tended to skew the figures a little bit. ABSA's Purchasing Managers Index fell to 47 in July from 47.6 in June. This shows that manufacturing is still contracting. Obviously, again, it's due to load shedding and higher interest rates. Manufacturing contributes about 11% of GDP. ABSA is predicting that the South African economy will grow by about 0.7% this year. That's more or less double its previous estimate. It also predicts that tax collections will drop by nearly a quarter, by 25%. The Reserve Bank is predicting a budget deficit of 6.6%, but that of course includes the 254 billion that it is taking over from Eskom. So that's the reason for that high figure. Unemployment fell by 0.3% in the second quarter and is now standing at 32.6%. South Africa has created about 2 million jobs since the start of 2022. That is a gradual recovery from COVID-19. To us, it's amazing that the economy can create jobs at all. Some of it, of course, is due to the rapid installation of renewable energy facilities, which has created some employment. Mining output was up 1.1% in June after May's fall of 0.7%. There was a sharp 11% rebound in platinum group metals, but Transnet Rail remains a major problem. Teresa, that produces coal for export, lost 300,000 tons of coal exports in the last 6 months. Load shedding is estimated to have reduced PGM production by about 20%. So that's very substantial. It means that there will be lower tax revenue. And of course, also we now have the impact of the civil servants pay hike. They got a 7% pay hike. The budget deficit will probably come in at about 4.5% of GDP. Moody's predicts that it will eventually reach 5.6%, and HSBC says it will come in at about 5%. Taxes from mining are falling rapidly. Commodity prices falling, and obviously problems with Transnet. That's where that comes from. Okay, let's have a quick look at Eskom. The government's Free Basic Electricity Program, or FBE program. This program was supposed to provide 10 million poor households with 50 kilowatts of free power per month. It is a program which costs the Treasury 19.2 billion rand per annum. But it only reaches 2.3 million houses, not 10 million. And only about half the money is being used for the Free Basic Electricity Program. We can only guess what happens to the rest. South Africa imported 47.5 billion rands worth of solar panels, batteries and inverters in the first 6 months of this year. That's about 50% more than the 32.3 billion of imports for the whole of last year. And it's about 3 times what we imported in 2021. And this shows how businesses and consumers are moving towards renewables, especially solar power. The economy will soon be able to generate enough power to make Eskom more or less irrelevant. And that power will be both cheaper and more reliable. Once again, business is taking over from where the government has proved to be ineffective. And that, of course, is the pattern of the ANC's 30 years in power. You can look at the education system, you can look at the health system, you can look at state-owned enterprises like the Post Office or SAA, and the story is basically the same. Wherever government has failed to be able to produce or to maintain something, private enterprise has stepped in and taken control and taken over. Johannesburg, of course, the city of Johannesburg is trying to follow Cape Town, and they've accepted 4 bids for 92 megawatts of power, renewable energy. That will be almost enough to avoid 1 stage of load shedding. Their objective is ultimately to have about 500 megawatts, which will apparently avoid about 5 stages of load shedding. AECI has just announced that it's building several large power stations, power installations with solar. It plans to generate a total of 14.3 megawatts, and it will at a cost of about 145 billion. The Minister of Electricity is Minister Ramagopa. He says that Eskom has 25 projects to eliminate load shedding. When complete, they will provide 16 gigawatts of power. Maybe. Well, it remains to be seen. Load shedding will cost the economy about 400 billion more this year than it did last year. It will also shave about 77 billion rand off tax receipts. So far, we have had 218 days of load shedding this year, and that compares with the 202 days that we had in the whole of last year. So load shedding is back at stage 6, more or less indefinitely. This situation is not getting better, it's getting worse. And anyone who's not made a plan to get renewable energy or to shift away from Eskom is operating in the dark now. Okay, let's consider the rand. I'm just going to put it on the screen here. So that you can see what I'm talking about. The rand has become a leading indicator for the S&P 500. And when investors move towards risk on, they sell their emerging market assets and shift into things like secure assets like US Treasury bills. When the rand falls, the same sentiment that causes it to fall tends to cause equities overseas to fall as well. And the opposite is also true. When the rand strengthens and the sentiment moves back towards risk on, then obviously some of that money moves back into equities and the S&P 500 rallies. Local factors, of course, also impact on the rand. Rising interest rates makes our bonds more attractive, and that tends to cause the rand to strengthen. But load shedding and general economic mismanagement in the country are negative as far as overseas investors are concerned, and they have the opposite effect. Overseas investors are attracted by our relatively low inflation rate and also the independence of our central bank. They are repelled by unaffordable populist policies like the NHI and the expropriation of land without compensation. In the last 12 years, since Trevor Manuel's influence as Minister of Finance has faded, the rand has been falling steadily against the US dollar. So let's see if we can show some of that here. Sorry, today I'm using my finger mouse. So that's why I'm not quite fast as I usually am here. Okay, I'm just pulling in more data for the rand to show you the last 12 years. I've drawn a nice trend line here that shows you that basically from when Trevor Manuel left, the rand has been weakening fairly steadily. Of course, in an emerging economy, you would expect the currency to weaken over time against a first world currency like the US dollar, but the extent of this fall is substantial. And we expect that falling pattern to continue to go down. We expect the rand to continue to weaken steadily against the US dollar. Of course, most JSE listed companies have some exposure to the rand, either because they export and therefore a weakening rand benefits them, or because they import, in which case a weakening rand makes their costs go up very rapidly. Of course, the rand is impacted by local factors, but it's also impacted by this international sentiment towards risk on or risk off. But the underlying trend seems to be downwards. Okay, let's look at oil. I'm just going to look at the Brent price of Brent crude oil. All right, let's pull a bit more data into this chart here. Okay, what I want to show you here is that the oil price, it was in a strong downward trend, and it broke out of that trend, and it's been trending up since then, including over the last month. It's now reaching over $90 a barrel, and that's quite high. So obviously in time that will impact on inflation worldwide. It certainly will impact on the petrol price here in South Africa. There is, however, significant support for the oil price at about $72 a barrel. And obviously this also reflects the improving situation in the world economy. As the world economy grows, so there will be a greater demand for oil. All right, now I'd like to just talk a little bit about the winning shares list. As we explained earlier, our view is that Wall Street is now back in a bull trend after an unusually large 25% correction. We expect the S&P 500 to break to a new all-time record high probably before the end of this year. If we are right, then investors should be substantially invested. To assist clients with share selection, we have developed the winning shares list. Beginning with just about 2 months ago, we started to list the names of shares which we thought had a good potential for capital gain. Of course, all our selections will not prove to be winners, but we will assume that you have a solid stop-loss strategy in place. Our rule is that we never lose more than 15% on any share market investment ever, and that includes our dealing costs. So our stops are never set more than 12% out. If you think about it, on our winners we can make 100, 200, 300% or more. But on our losers we cut our losses at 15%. That shows that we almost guaranteed to be successful from a mathematical point of view, if nothing else. Anyway, by last Friday, which was the 1st of September, there were 39 shares on the winning shares list. 11 of them were performing above 100% per annum. A further 10 were performing between 30% per annum and 100% per annum. And 13 were below the prices at which they were added to the list. But none of those underperformers was down by more than 5%. This shows that the winning shares list is producing a good proportion of winners. Remember, investment in shares is not about certainties. It's about probabilities. It's about bending the odds in your favor. Anyway, the following shares have been taken from the winning shares list last Friday. And the winning shares list, of course, is available. If you go to the bottom of this webinar below in the comments, you can see a link there. It's available to our clients. So the first share I'd like to talk about is CA Sales. I'll just put this on the screen here. CA Sales was added to the winning shares list on the 25th of August at 775 cents. We've marked on the chart here where it was added, as you can see there. And it's gained 13.55% in just 9 days. It's a recent listing on the JSE, involved in fast foods, alcohols, fast-moving consumer goods, that kind of thing. It also does point-of-sale systems, warehousing, distribution, and marketing. In its results for the 6 months to the 30th of June, CA sales had headline earnings per share up 21.5%. We added it to the list after we saw its trading statement, which was published on the 25th of August. Basically, before this upward move that you see on the right-hand side of your screen, it had been moving sideways for a long time. So I think we caught it at a good moment. All right, the next share I want to look at is Nampak. This is obviously a very well-known South African packaging company with overseas interests. There you can see we added it to the winning shares list over here on the 26th of July at a price of 186 Rand per share. All right, since then it's gone up to 287 Rand per share, which is a gain of 54.3% in just 5 weeks. This is a company which got into a lot of trouble. It had excessive debt after COVID-19, but it has engaged in a turnaround strategy and it sold off non-core assets, cut its costs, and it's done a rights issue. We bought it straight after it did a 250-for-1 consolidation. So this was what we call a turnaround opportunity, and it certainly paid off very nicely. Okay, let's look at Calgro. Calgro was also on the winning shares list. It was added to the winning shares list on the 15th of August at 356 cents. Again, you can see this is where it was added over here. And it closed on Friday at 438 cents. It's fallen back a little bit on profit taking, as you can see from the chart. It's obviously a property developer, which is diversified into producing memorial parks. It develops residential properties for rent or for sale. In its results for the year to the 28th of February, headline earnings per share was up 45%. Like all property companies, the share is trading at about half of the company's net asset value. So that's worth having a look at. Okay, then the company Foresight. This is a penny stock, and it's involved in the fourth industrial revolution, or cyber physical systems, it says. We added it to the winning shares list at 31 cents, as you can see here on the screen. It closed last night at 47 cents, which is a gain of 51.6% in a month. It's a company it's a penny stock. It's based in Mauritius, and it's involved mainly in cloud computing and the Internet of Things. 42% of its business is outside South Africa, which gives it a rand hedge element. In its results for the 6 months to the 30th of June, headline earnings per share nearly tripled. They were up 197.2%. The next share I want to talk about is Curro. This is in fact the last share I want to talk about here. And Curro was added to the winning shares list, as you can see there on the right hand side there. You can see there's the arrow. It was added there on the 21st of August at 935 cents. It closed last night. It closed at 995 cents. So it's gone up 6.4% in 2 weeks. It was spun out of PSG, as you know, and it reached an incredible record high PE of 245 in January of 2016. And obviously from those dizzying heights, it could only fall. And with COVID, it eventually fell to 770 cents, where you can see on the screen here, it did this island formation, and since then it's been tracking upwards. We think it's still got quite a lot of ground to gain. Okay, folks, that's about what I've got for you today. If you want to find the link to Twitter, or the Twitter handle, I believe it's called, it's in the description below. You can find it there, and you can also find a link to the winning shares list, which is available to our clients on our website. Otherwise, I'd just like to say thank you very much for listening to me, and I hope that you found something of value. And I will be talking to you again on the first Wednesday of next month. Thank you for listening.